This is the wrap-up for the live market open for St. Patrick's Day, March 17th. It's a Thursday. Clearly, the main event is the Fed still having an impact on markets, hitting the dollar really, really hard. The Fed went full dovish yesterday, not only lowered the dot plot, which was expected 2 rate hikes in 2016. They're still worried about global developments despite some stability. They're seeing the quarter glass half empty. On inflation, they slashed inflation forecasts on the same day that inflation was actually higher than expected and above their target. They did mention soft business investment despite some improvement there, and soft business exports. And to show how dovish it was, there was one hawkish dissenter. This member, Esther George, did not dissent in the past. The US dollar crashed on the immediate aftermath and continues its spectacular fall during this European session. Okay, let's look at the charts and then talk about other events yesterday and today in this wrap-up. Euro dollar currently 112.90. Next line of resistance is very strong, 113.75. Support 112.50, 112.15, and 110.70. Above 113.75, we have 114.60 and 115. Euro dollar was grinding lower and then shooting back up, beating the post-Draghi highs. Pound dollar had lots of reasons to fall, especially that the UK government slashed the growth forecasts and the general uncertainty about the Brexit. We had the pair fall very nicely to very round support at 140.50. From there, we have an amazing bounce, 250 pips already, above resistance now at 142.80. Next resistance, 143.60. and 144.40, but we have a rate decision later on. What's also surprising is with this better mood in markets, stocks rising, oil rising, risk currencies rising, but also the yen is rising against the US dollar. It crashed from the previous range above at the 113 handle, even below 112.20 support, currently at 111.60. Very, very strong support at 111, a double bottom there. 112.20 turns into resistance. Dollar CAD, spectacular crash also because crude oil inventories were sort of bullish for oil. And also we have a meeting between OPEC and non-OPEC members in exactly 1 month's time. So the Canadian dollar had reasons to rally on its own, under 130, extending its fall to already 129.45. Very strong support at 128.30. 130 now turns into resistance. So it's the weakness of the dollar, US dollar, and also rising oil prices supporting CAD. Aussie dollar had a weak jobs report overnight. It only temporarily halted the rise of the Australian dollar, which enjoys the Fed's dovishness. We had a false break under 74.40. Since then, we're 200 pips higher, breaking above the previous high of 76. Next line of resistance is above 78.40, followed by 79 and 80, 76 and 75 are support. Kiwi dollar, well, got some bad news this week with milk prices, but yesterday the Fed's dovishness and better than expected GDP, 2.3% gain year over year, better than expected. Now the pair is trying to break above the previous resistance line of 68.20. Next resistance is 69 and 70. 68.20, if confirmed, turns into support, followed by 67. Okay, so a huge dollar sell-off across the board. Next rate hike is expected only for September. It was beforehand in June. Very, very, very dovish. We talked about events that came out yesterday. A few more to mention are that housing figures in the US were mixed. Inflation, as I mentioned, came out better than expected, just exacerbating the surprise with what the Fed said about inflation. Yeah, trade balance missed in Japan. Today we had the Swiss National Bank's decision. Let's take another look at that. No changes in there. Sorry beforehand about the confusion. We have your Swiss exactly in the same place where it was before the release, 109.89. So in the last 30 minutes, no material changes. The 109 handle is the area where this pair trades. went in perhaps some resistance. Anyway, it remains boring. But we will have action, a bit of action from the European Eurozone final inflation figures at 10 GMT. Weak inflation will probably be confirmed. No changes are expected. The big event for today is the UK rate decision at 12 GMT. No change in rates is expected, but the Bank of England will probably join other dovish central banks. It's hard to surprise with dovishness, but you never know. Okay, at 12:30 GMT, we have jobless claims in the United States, which were really good last time. Let's see if this continues. And the Philly Fed, another industrial figure from the United States. Will we see an ongoing bounce in this battered sector? It's a question. So 12:30 GMT is sort of an opportunity for another look at the US dollar. At 2 GMT, we have the JOLTS report in the United States, a secondary jobs figure, but important for the Fed. Watch the number of quits over there. And, well, at overnight, we have the Bank of Japan's meeting minutes. Okay, so very, very busy week in the markets, very busy 24 hours with so many data points. First and foremost, the Federal Reserve killing the dollar. Maybe they did it on purpose. I don't know. Anyway, another thing, oil prices also gained thanks to the Fed, with WTI crude oil reaching highest levels in 3 months, getting closer to $40. I'm sure that many shale producers in the US are delighted. This will also make OPEC members slightly less inclined to cut production. So it's good for stocks, good for oil, good for everything basically, except the poor US dollar. Okay, yeah, that's it. So before we head off, I see a few more questions. We can now officially kiss goodbye Euro-dollar parity for this year. Yeah, some banks still expect parity. I was not talking about parity, but I did expect Euro-dollar to fall. I did expect the Fed to go a bit more hawkish, at least not that dovish, not so extremely dovish. Euro-dollar anyway, next resistance 113.75. CAD still sliding. Yeah, dollar CAD. Yeah, well, the low for now is 129.45. Currently at 129.70. Between 128.30 and 130 is the range I see. Very, very exciting days in markets. So that's it for today. Wish everybody a safe and successful trading day. I hope you enjoyed, those of you that came to the live coverage yesterday, enjoyed the show, and that you enjoyed the show today. We'll be here tomorrow with the events that we had this weekend, of course, with what's going on tomorrow, and a preview for next week, as we do every Friday. Next week is we have here in Spain, it's Semana Santa, the Holy Week. Anyway, the week before Easter, and next week we have weekend. It's a long weekend. Not this one. This one is a regular one, but the next one, the last one of March, is very busy. Okay. Anyway,